Good morning, everyone, and welcome to ARCO's first ever webinar. My name is Michael Voges, and I'm the Executive Director of ARCO. And during normal times, we were planning to hold our conference, our 5th annual conference, on the 1st of July under the topic of what next, which is what we always do in terms of looking into the future, what the sector needs to do, how it might need to change. But then obviously, as the coronavirus struck, we had to cancel having physical events. But we're very pleased that today we're holding the first event in our digital season, which we've branded as What Now, Not What Next, and really talking about what the sector is facing at this point in time. And we're really pleased that so many people are joining us here today. We have a very distinguished panel of speakers joining us here today. And starting with a quick introduction, we're going to be joined by Jane Ashcroft, who is the Chief Executive of Anchor Hanover, which is the largest charity and provider for older people services in the UK. And Anchor Hanover runs everything really from a large number of care homes, a large number of sheltered housing, but also a huge number of extra care schemes and some large-scale retirement villages. Jane's also our Vice Chair, and we're very pleased that she could join us today. We then have Honor Barrett, who's the Managing Director of Birchgrove, which is a rental assisted living provider for private rent. Honor will actually be joining us from her scheme in Sidcup, where she's been going once a week for, I think, 3-day stints to look after her residents there. We also have with us Will Bax, who is the Chief Executive of Retirement Villages Group, who have about 15 retirement villages across the UK. And then we have the two Phils, Phil Bayliss and Phil Schmidt. And Phil Schmidt is a Senior Director at CBRE, and I think well known to many of you. And we're very grateful to CBRE for sponsoring and supporting this event today. And we'd actually planned to do different research with CBRE for the conference on tenure models, but actually we had to refocus that a bit. And we're very grateful that Phil could ask an investor base really about what their outlook for this sector is, and we'll come to some of those results later on in the discussion today. And finally, we have Phil Bayliss, who's the Chief Executive of Later Living at Legal & General, and is backing 2 ventures, both Inspired and Guild. And Inspired, obviously, have made huge progress and are looking at about 15 to 20 sites, I believe, right now, but Phil will talk more to us about their thinking. So that's our panel here today. I'm very excited that they could join us, and we will now look at the discussion. So the way we're going to do this today is really, we're going to talk a bit about what the response has been, or what's been going on in the last roughly 8 weeks. We're probably not going to spend too much time on that, and then really talk about how this crisis may have changed the customer perception of this sector and the customer proposition, and then talk also about what the long-term prospects of this sector are, which Will's already alluded to. But I think probably more importantly, what people are really keen to understand is what are the short-term prospects that we're looking at, the medium-term prospects, maybe the next 2 years, as we might be looking at some form of recession in the next in the coming months. And certainly speaking from ARCO's perspective, it's been quite a ride. I remember that my colleague Ellie, who was leading our operational response to this, I think we had our first members call about COVID. I think it was the end of February or very early March, which meant I think there was lots of sharing of information, lots of exchange of ideas, which was good, which meant that when the lockdown finally came, I think our members had either already locked down or they were ready for it. So I think that worked quite well. And then what ARCO's role has been is very much arguing for retirement communities to be considered as part of the health and social care landscape, key workers and so on. But obviously we don't have any residents living with us. And that's why I'm really interested to hear what the challenges have been and how it's been in the last few weeks living with people on site. And maybe Honor, if I can go to you, how has it been, especially those first few weeks when no one really knew what was happening? If you can give us a bit of an insight into that.
Yeah, for those first few weeks, I think I was just chatting to Jane yesterday in the first few weeks where you we all felt like the sand was moving beneath our feet, and you make a decision and 2 hours later it's completely redundant and you have to start again. So and as you said, actually, having joined all those ARCO calls, we did decide to go a bit early, not quite as early as Jeremy at Middleton Hall, but we did go early and we locked it down. And we had an amazing foolproof plan of Team A was going in first, then Team B, and Team C was the backup. And then Team A got the virus, Team B had a death, and I was Team C. And it fell apart within about 18 hours. So we moved in on site and have been living here ever since, really. And what started out as chaotic and frightening and disorienting has just become the most amazing, fun, positive bonding experience, where we've ended up knowing so much more about our residents than we ever would have known before. It's really intimate relationships. I mean, we've definitely crossed a few barriers. The CQC would probably really not be happy, but we have just gone on a journey together whereby we all got through it. There's no virus today. I know it's really nervous for all of us to come and talk today, because you feel as soon as you say, I haven't got the virus, you'll get it. So I was really nervous about coming on, but today we don't have the virus. All the residents are fit and healthy. And I guess we've settled into this weird existence where it seems totally normal, something that you couldn't have conceived of 12 weeks ago. So we do social distance all the time, but it's quite a touchy-feely thing what we do in retirement. So sometimes you just can't, you forget and you have a hug. We've had a few accidents, few falling out of beds, and actually what none of us wanted was the NHS coming in. So quite often we've tried to fix things without necessarily calling the paramedics that we might have done before. So there's definitely been a few treading the lines. One of the really unbelievable things is spotting what somebody that you pay the minimum wage, what she'll do kind of out of love. It's really strange how these girls just walk into really dangerous situations without any thought for their own personal safety. And you sort of think that's really, it is intense what they do, these girls. And I've renewed respect for care.
Would anyone else like to come in on that? Maybe Jane, I think you had that broader spectrum of, you know, both the obviously you run more than 100 care homes and you have a large retirement health or sheltered housing portfolio. So how has it been?
Yeah, I think the early days, I'm sure we were all the same, really. So there was a lot of concern, there was a lot of confusion. We were all seeking clarity where there really wasn't any. And I think you realise that our role as operators, providers, landlords, our legal responsibilities are very important, but so are our relationships with our customers, as Honor has described. And so we, relatively early doors, made sure that we were keeping people as safe as possible. I think it comes down to a number of key things. So issues around cleanliness, hygiene have become much talked about, and I'm sure will continue to be talked about, and we might want to talk about what we think that might factor into future thinking. So lots of our customers, our residents, wanted to know that the environments, particularly the communal environments in our services, you know, that were safe and were as closed down as we could possibly make them. Of course, what we know is that we're all individuals and our customers are all individuals. So people had quite different expectations about what closed might mean, different risk appetites. And I think how you work with individual communities in a retirement village or an independent living service or a care home to make sure there's a community that's still functioning as a community but is still safe is one of the things that our frontline colleagues do brilliantly. So whether it's the general managers in our villages or the carers in our villages or our care homes, colleagues have been, as Honor said, an absolutely critical part of getting through this period of time. And I would say communication as well. So thinking about how we communicate with residents and their families and our workforce, how we try and give a consistent message at a time when people are picking up all kinds of different confusing information, and just being really, really focused. I mean, you've probably not seen a lot of Anchor Hanover over the past couple of months. And as a big provider, you know, we often make a noise about lots of things. We've just been very, very clear that we're focused on supporting our colleagues so they can support our residents. And really sitting behind that has been communication, trying to find clarity and give people clear messages, and really, really supporting colleagues to do the job they want to do. We've started to move now into another phase, I think, and I'm happily talk a bit more about things like testing and some of the other things that I think will be helpful as we move forward. But fundamentally, I think services that support older people and try to give people a positive, happy later life, which is what we're all about, have really proved their mettle. We've found what the problems are. As Anna said, we've got to know our residents across our services much, much better, and I think that will help our thinking about future services. And a lot of people have been really, really committed.
I think maybe we can come back to what are those lessons that you've learned about your customers, and that's something interesting to unpick. But maybe Phil or Will, what have your experiences been in terms of that direct operational response in the last 8 weeks? Maybe going to Phil Bayliss first.
Wartime spirit, I think, is the best way to describe it, Michael. A real sense of community. The whole what is the benefit of living in a community is often the naysayer question I get outside of retirement community sector, and we're thriving because it all got built around, let's build a health shield around each of our villages, inclusive of our staff and the residents, and that has turned into a phenomenal response by residents. It's been resident led, and much like Honor, we have our residents are fit and healthy, and we currently have no viruses in our communities. So when this first started, there was obviously quite a lot of work to be done around what does a pandemic lockdown look like in a retirement community. We then, I would say quite recently, you started to get into this is going to start impacting mental health, and started thinking around how we make sure we tackle the mental well-being of everybody as well. And when the news flow started to look like there won't be a vaccine for 12 months, those that are vulnerable in health terms will be locked down for the foreseeable future. That really started. You could see that started taking effect on some of the residents. So thinking, we're really quite active around how do we create a purposeful, engaged community that is still enjoying themselves to the extent they can, and getting outside, doing the social distancing, whatever the classes are that they'll end up doing outside. That really actually makes a huge difference. And I know VE Day for a lot of the ARCO members was a big day, and that really showed, I think, the spirit in each of the communities. In terms of, we'll come on to the lessons later, but a lot of the answers sit with those that have the daily contact, and we've worked hard to make sure we reduce the distance between customers, those that are face to face with the customers, and the board of the business. We've had to work hard to make sure we can be responsive, and that would be the big sort of corporate learning, is making sure you dial up the volume of the residents and the local teams to make sure you can be very responsive and do the right things by the customer.
Thank you. And then Will, just to hear a bit from Retirement Villages Group, and I think you, like others, I saw some of your VE Day stuff on social media, and I think also there's you, like others, you built like a virtual tools to reach out to the customers, and maybe you can talk a bit about those aspects as well, Will.
Sure, yeah. I mean, some very similar themes. I think for us, the key point was reacting quickly, and it was obvious quickly that this was a time to be decisive, and in spite of the multitude of different opinions that were at play, we're only going to regret not making clear decisions and issuing clear guidance that erred on the side of caution early. And we pivoted the whole operations of the business around shielding people. That was 3 weeks of hard work, ensuring that we had contingency workforce in place to do that, and ensuring that we could do everything from providing food deliveries for 2,000 people through to providing 3 meals a day if required for the same group of people. And there was, as Jane and Honor and Phil have all alluded to, there was an extraordinary degree of commitment from the teams on the ground in ensuring that manifested in a way that created a sort of halo feeling of safety. And the purpose point is extraordinarily powerful, and I think it's a huge silver lining to come out of this whole process to me. And that connectedness between different parts of these communities. I mean, we talk of retirement communities as just being our customers. I think too often actually what has happened over the past 2 months is these communities have become much more deeply rooted into their component parts, and the bonds that already existed between our staff and our customers have just deepened tenfold, is my sense over the past few months, and it's been a real joy to witness that. The well-being side is interesting and hugely important, I think, and for us that has been everything from ensuring that people who, customers who previously didn't interface with technology particularly actively, had iPads, understood how to use FaceTime, were able to, stay connected to their families, in a visual capacity, all the way through to, creating this virtual community with a load of content being pushed out all the time. Ensuring that our gardening clubs were more active than they had been, ensuring that our grounds were better equipped with walking trails and what have you, to keep people out and about. And one of the fortunate things has been the weather that we've had, isn't it? And actually trying to get people out of their homes safely and enjoying nature and wildlife, and ensuring that is built into routine has been a focus. But the overriding, like Phil and Honor, we've been very fortunate in terms of having put in place a system that to date has kept us, our communities relatively protected. We've only had a handful of infections. And the remarkable thing is, I think, how this sets us up for the future and having a conversation around the safety and the confidence that people living in this context can have as they look forward in life. Knowing that they have a bedrock, upon which they can be confident, enables them to be active, to be independent, but to remain safe. And my sense is that this won't go away quickly, and therefore providing these support networks will only become a more important focus in the short and medium term.
Can I talk briefly? I know Honor said that we don't want to tempt fate, but certainly the picture in the retirement community sector, we haven't seen the levels of infections, especially intra-community infections, that we've seen in care homes, but obviously it's still a long way ahead. There's a question that I had, but we also had something in the Q&A where it was Peter McLean, I think. He said that what contributed to some of those factors of keeping infection levels lower, and was it a mixture of the staffing or maybe also the physical infrastructure? And maybe Jane, I can ask you, because obviously you've seen the difficulties across a range of different services.
Yeah. I mean, I certainly think design and space and the way space is used is a relevant factor. So obviously people living in retirement village settings are typically in apartments or even separate buildings. We have bungalows and houses within a number of our villages, and that makes a difference. Equally, many of our care homes have people live in self-contained units with their own front door, and that's definitely one of the factors that has made a difference across a range of different care settings. I guess I'd also say typically people living in care homes tend to be, by their very nature, older, frailer, or certainly poorlier You know, people use care homes, often it's an end of life offer, whereas the typical, I mean, we've probably all got quite different client groups, and we're probably in some ways in different segments of the market. There are a number of factors which I'm sure will lead through to our thinking about the future, that do mean that different, and I think even individual sites have different dynamics to them. So some of it's about design and layout, and it's easier to keep some places safe than others. Some of it is about workforce, and the people that you've got on the front line, and where they're working and how they're working. And you know, we've mentioned staff, keeping our staff safe so they can keep our residents safe. Accessing PPE and those kind of things have been really important drivers of protecting people as much as we possibly can. And then communicating and helping people to keep themselves safe. So again, I think people living in a kind of retirement housing, retirement village environment, a lot of what we've been seeking to do is to help people to follow the guidance and to keep themselves safe. And that is a different duty of care and a different relationship to the one that you would find within a typical care home setting. I mean, several of us have care homes within our retirement village model, so there is a kind of interplay within the two parts of the sector. And it's interesting that a lot of the media focus has been on care homes, because care homes is a sector that has media attention, whereas retirement village is a new young market. I'm sure we'll talk about the demand versus the supply. So we're not a sector that's as well known. So I think there's a number of things that kind of can, and undoubtedly, as we move forward and we become clearer about the nature of the virus, the best way of protecting ourselves from the virus, the best way of treating the virus, we'll be learning more and more that we'll be able to weave into our thinking about future design, service delivery design, as well as physical design of our buildings.
Yeah. I think Phil Schmidt, you had looked into some of the issues around infection rates and design. What were your thoughts on that?
Well, I think what we're beginning to look at is how modern purpose-built assets are going to fare compared to older dated stock. I mean, if you just think very simplistically, wider corridors, ensuite wet rooms, versus shared bathrooms, the sort of logic suggests that you've probably got a higher risk of infection issues if you haven't got that ability to separate. So I think we certainly think that, out of the back of this, the real estate response will certainly look more at reprovision, redevelopment, reconfiguration, and looking at how the design of these, of both retirement and other healthcare uses will change off the back of managing this.
Okay. I think I'd like to talk a bit to what you've already alluded to, and this for me is fascinating, and that's really coming back to the customer. And you've some of you said you've learned new things about your customers. One of the big questions that I would have is, what are customers looking for post-COVID? But from your experiences on the grounds, what are some of those things that you've learned? I think, Anna, you mentioned that first. So if I ask you about some of those insights.
I think because I've had a bit more time to hang out with the residents, we've talked a lot about the thought process that they go through to choose to live in a retirement community, and some common themes that come up. Geez, we spend so much time thinking about, the worktop in the kitchen, but that never ever comes up for them. They just seem to predominantly say the word security. So I would say, and I don't know whether that's because it's been exaggerated by what they're going through right now, which is really making them feel vulnerable. But I think that when I come out of this, my marketing will be better. I think it'll get to the point, and I won't spend too much time faffing about with lifestyle and swimming pools. I think it'll be much more pertinent, and we're just playing with it at the moment. Actually, it's how, I don't know what everybody else is struggling with, but how do you market at a time like this without looking like you're jumping onto some horrible bandwagon? But we're trying to write pieces now which talk about security and health in a way that we never would have done before, to try and just push that button a bit harder.
Okay. Phil Bayliss, you were saying in terms of your customer journey that you've been getting your heads around during this time. What do you think have you learned about what the customers are looking for, and especially will they still be looking for it post the crisis?
Trying to summarize 25 hours of video that we've had that we've recorded with our residents in lockdown. A strong sense of community would be item number one. The thing I get really excited by is it's now become a public conversation of where you live is obviously, and this is why we're all in on this call, is where you live is a material contributor to who you are, you being at your best, and having a terrific health outcome for you. And that is also where you live is who you're around, the community you're in, the I'll make do in the old family house is becoming less of a topic for our potential customers, and those in the sort of in the funnel of vaguely interested down to looking to reserve a property with us. And it's jumped straight to much more practical sort of Maslow hierarchy of needs of don't talk to me about self-actualization. I'm worried about me just in getting a good health outcome, and then you start growing onto that and saying, and to Honna's point, I think very little actually has to do with the real estate. As long as there's the base level of yes, we need to design age-appropriate housing, and it needs to be good. It all hangs on the community you design and the way you interact with the residents. That's the key point.
I don't know. So I've got a kind of follow-on question to a certain degree, and I think there's two schools of thought. I'm not saying they're necessarily opposed to each other, because one is people are saying, well, older people will want to avoid going to a care home at all costs, which I basically is an interesting one because it doesn't really consider the reasons why people go to care homes, because there are needs that are met very effectively in care homes. I think some of the stories we've seen about the lengths that some care homes have gone to keep their residents safe and the socially distanced visits are going on, I think that's fantastic. So you've got, on the one hand, you've got the people saying, oh, the housing with care sector will benefit from people not wanting to go to care homes. And then you've got the issue where Phil is saying, there's also the issue of people saying, well, actually, the last 8 weeks have taught me my house is too big for me and it's quite lonely. So where will the main customer driver come from in the panel's view? And maybe I'll go to Will on this one first.
Yeah, I think it's a really good question. I think traditionally, we would have pointed to customers looking to ensure they were living in a context that could support their health needs as they changed effectively. So, the ability to bolt on care in their homes being fundamentally important. Increasingly, and I think, COVID only reinforces this, the whole conversation is around longevity. So care is the safety net, but actually the dividend of living in these places is that they keep you, mentally, emotionally, and physically, well, to a point of, deferring that, event. And it's interesting that, when I was listening to Phil talk just a moment ago, I sort of sensed the conversations that we're having around learnings. What have we learned from our customers? Well, the things that they place real value on right now are all the things that get taken away. Oh, I mean, it's a really obvious thing to say, isn't it? But what people are talking about right now is not care provision, and its fundamental importance. It's independence, and it's the community that they feel more detached from or isolated from. And my strong sense is that those are the aspects of the proposition that we need to be ever more creative in emphasizing and dialing up. Actually, what do we mean by those communities? Are we talking about internal communities of residents, or are we talking about ensuring that the tendrils of our communities reach out, but the communities around us also reach back in. And we have some really lovely stories of volunteers around a number of our villages who very early on in this process came and knocked on our door and said, how can we help? We know that you have a group of vulnerable people here. We know that they're struggling to get out, that they need to shield themselves. How can we help you look after them? And there is this this sort of spirit of collective endeavour that I think we need to try and take forward with us in redefining what we mean by community and how we see our place in the world. And I've said before, I see the place of all of us as being central central operators within the wider neighbourhoods around us, and there's a potential to see ourselves as placemakers in providing services and utilities, amenities back to the wider neighbourhoods in a way that integrate and create a sort of broader dividend, social dividend around us that is not only good for our customer, that is good, but is good for the wider towns, villages, cities within which we find ourselves. And I think that will be a really important part of our thinking moving forward.
Okay, so I think it's an interesting one. So in terms of, again, maybe go to Jane and Honor on that view, where will the driver come from? Is it going to be more needs driven or more community driven, or is it indeed a false dichotomy?
Yeah, I think it is really. I think it is a bit of a false dichotomy because the market is so big. We're slightly in danger of doing that thing of everybody over 65 being the same. And I think, what we've learned about some of our residents and customers from talking to them more, so we've been doing telephone befriending services and all kinds of stuff. I think Phil's point about kind of community resilience has really come through, that we have lots of residents who are strong and resilient, who have become enablers for their neighbours in many ways. And we also have residents who are anxious and concerned and isolated and have needed a lot of support. But also I think independence is quite, I would probably use the word interdependence. I think people have learnt about what their critical interdependencies are. So we've learned a lot of our residents have families from whom they get a huge amount of support, and they've really missed that. But we've also found residents who may not have a lot of contact with families or may not want their families to be a support mechanism. So I think we've learned quite a lot about the kind of some really practical issues about customer segmentation, to use a very sort of brutal expression, about people's preferred ways of living and people's interdependency on faith groups and golf clubs. Blimey, the golf club thing's been big for some of our residents. And I just think it's reinforced that this is a market with lots of different drivers. And so, from our point of view, the fact that we've got for rent and for sale, different tenures, different affordability options, because I think people are absolutely right that at the moment, the kind of built environment is less of a driver, but that will come back because people's decisions, that the people we're talking about who aren't using our services at the moment and what might bring them in, part of that thinking has got to be, what can I afford? How do I balance my the fundamental issues around how I fund the best quality of life I can in my later life? So I think it's a kind of complex mix, but the great news, I think, well, the underpinning great news is we're all living longer. Let's keep reminding ourselves of that. And for our sector, I think that there is demand for a variety of different services. So, of course, as a provider of a large care home group, we're really thinking at the moment about where will we land in terms of the views of care homes, and should villages have care homes in them, should they not have care homes in them? And I don't think there's one right answer. I think there's lots of different factors at play, and listening to future residents and families is one of the most powerful ways of shaping our business strategy going forward.
Okay, we've heard about, you mentioned business strategy, and that's interesting because we'll talk a bit about what this means for the businesses and the investment in this. But to kind of finish off this section, really, we're going to try something, and that's a live question from an audience member. So a bit like the kind of 5 o'clock Downing Street thing. And maybe in a minute, we have a participant ready to ask a question. It is Rebecca Jarvis, who should be elevated and might pop up on our screens right now. And then she can put a question directly to our audience. Oh, I can see that she's coming here. So Rebecca, would you like to introduce yourself, but also, yes, say where you're coming from, and then ask our panelists a question.
Hi, well, I didn't quite expect this.
It worked.
But it looks like it's worked. Hello, everyone, and thank you for inviting me to join you briefly. My name is Rebecca Jarvis. I work for the Health Innovation Network, which is one of the academic health science networks. We're the AHSN for South London. I'm not going to talk too much about that, but our main remit is to look at innovation in health and care and spread it within our geography. And I kind of came across the retirement village sector a bit by accident. I have a background in health and social care, and I've done a lot of work with care homes. And I was quite interested in looking at alternatives to care homes. And I think, you know, clearly it's been really interesting hearing your experiences so far. And I think clearly we're all sold on the health and wellbeing benefits of living in a retirement village or kind of other housing with care models. But I'm always struck by how little awareness there is amongst my health and social care colleagues of the sector. And I'm including the voluntary sector in that. So some of the big charities like Age UK. And these are the people who are often that are often the first port of call to give advice and guidance to older people. And I wondered what your thoughts were about that, why you think that is, and is there anything that can be done?
I think that's a very good question, Rebecca, and one that we grapple with a lot. Who would like to put their hand up and address that one? Do we have any volunteers? Jane.
Well, I'll make a start while others are thinking of very thoughtful responses. So I'll do the warm-up and then let others add. It is a brilliant point, and it is absolutely one of the reasons why ARCO was established a couple of years ago, because of that sort of frustration that there is this great model. I think we're sometimes a bit stuck in, because there isn't a huge supply of retirement housing with care, it can be quite difficult to talk about it and to show people, because it is a relatively, most of the traditional provision is in the social housing part of the sector, and it's very valuable. So the extra care type services, which I hope also have a strong future, but there is a mismatch, which we talk about a lot, between the potential demand and the current supply. I think that's one factor. And there's also a kind of policy world where in health and social care, the obsession with integrating health and social care, which is understandable, but you know, somewhat like world peace in my mind, tends to be a big focus. And the world of housing tends to be seen as a very different area in terms of policy and understanding and economic considerations. I'm completely biased, you know, as the chief executive of a housing association that provides housing and care. The integration of housing and care is the most fertile route forward, I think, for a healthy ageing society, in a way that provides the best outcomes for older people and is economically really sensible for the country as well. So I think some of it is complexity. Michael would like us all to have consistent language so that we all just called everything the same thing, and we all agree that would be great, and then we try and agree what that language is, and then we have to go to the pub because we just can't work that out. Something about a kind of easy descriptor that gets in the way as well. But those would be my sort of opening rambling thoughts, but I'm sure others want to leap in, so I won't prattle on any longer.
Who would like to come in on that one? Phil, I see you. Phil B, you've unmuted yourself.
Terrific question. And on other events, what is the one thing that you would change? My consistent answer is health and housing need to come together as a public policy unit, as a way of thinking, and the data just keeps coming out and proving the point. You know, it's the biggest driver of hospital visits and deaths, sadly, over 65 would fall in your own home. And we've stumbled along the way of trying to think how we're going to coordinate that. But from our perspective, how can it be that our residents go to the GP 50% less? How can it be that their hospital stays are 80% down, unplanned hospital stays are 80% reduction in stay? How can it be NHS spends 40% down, and yet we're not part of the health network? And I think I've certainly jotted that down. I think you've touched on the other bit, which is the awareness side. Is I come from a big financial institution. We have an enormous sort of ecosystem, for want of a terrible corporate term, but we have an enormous network of people who advise people on their financial requirements, and we provide the wholesale solution for them. And I can't help but think we need to build as an industry a similar platform of the equivalent of a financial advisor being that health advice that you experience in the NHS. And we need to be part of that preventative solution. And the other piece that I talk about that I get very excited by is I feel like we're all driving the first version of monetizing prevention, actually getting a great economic outcome for us and society and the customer by getting in early and driving prevention, living in appropriate housing, living in an engaged community where you have better health outcomes. So I don't have the answer other than great question, and I'm very supportive that this becomes a focus of ARCO and its members.
Will, sorry, got Will, and after that, Phil.
Yeah, I mean, I think it's just adding to what Phil and Jane have said. I mean, the societal dividends are obviously huge, and I think we're in an interesting inflection point right now around the conversation, the public conversation around aging, and what, how we're dealing with aging as a society. And it strikes me that there has been this gap where the public narrative has been very, around housing, for example, has been very much focused on, the younger demographic groups in society rather than the groups that we're talking about during this conversation. And there is this societal gap, that our policies, whether they be economic or social, are geared towards promoting success, at the other end of the spectrum. And it seems to me that, COVID is a good example of that. Suddenly the conversation around aging, again, looks at the headwinds, the challenges that we faced in the care home sector, as opposed to looking at, the opportunity and the dividend and the hope and the community, and the enlightened opportunities that, the residents that many of us, are lucky to have in our communities, that they talk about, and their language is very different. They look at a life that is opportunity rich and hopeful and integrated and connected. And of course, as the sector grows and more institutional capital comes into the sector and fuels that growth, and we see more of it, then I think there is an opportunity to reframe that conversation and, perhaps market's the wrong term, but present ourselves to the world in a way that starts to reframe the expectation of, and the understanding, in fact, of what we do. And, our sector has been hugely nascent, actually, and emerging, and only now we see you moving into a growth phase that provides that opportunity and investment in a different public profile. And I think it's incumbent on all of us to, grasp the nettle on that, and with much more vigour and approach that conversation, with a colour and richness that brings it to life for the customer, as opposed to sort of skirt over the surface of it as we sometimes risk doing, is it being seen as an investment. This is a lifestyle proposition, and it's one that has an extraordinary dividend for the whole of society, actually, not just for our own customer group.
Thanks, Will. And Phil Schmidt.
I think the sector itself, I think at the moment, the whole healthcare sector, I think seems at a real crossroads. And I think historically, social care and healthcare has been very much about cure, not prevention. And I think, and as I've said this before, I think the opportunity for social care, particularly to move towards a prevention, follow the fire brigade, spend your time preventing rather than treating with it, is really there to be grasped. And obviously this, the retirement community space is an important part of that. I think two other challenges I think that are out there at the moment. I think one sort of linked to the lack of stock is because of some of the risks that are out there and the concerns about how you develop some of this, the number of locations that make this viable at the moment is limited. So there's a lot of concentration in certain areas. So for organisations that are trying to advise, unless you're in some of those areas, it's very difficult to offer those options. So there's obviously a lot of focus in the southeast, but unsurprisingly, there is people all over the country who could benefit from this. And at the moment, because of some of those risks, it's difficult to make it work around the country. That's not that people wouldn't like to go there. It's just, it is hard. It's a challenge. And then I think the other point is probably a lot of policy. And I mean, Jane and Will and others probably better placed to answer some of this. But I think a lot of the focus for policy for local authorities geared towards those that are supported by the state. And I think those that are self-funders or who would qualify as self-funders have, there's not a huge amount of support and help. And certainly I know people that have had to go looking for care when they've gone to the local authority, they're sort of met with a bit of a blank face that they don't really know how to help. And so I think, that policy focus and support is geared in one area, and actually, the biggest chunk of the population are those that need to fund themselves and look after, pay for their care going forwards.
So I think, Rebecca, you've hit the nail on the head there, and that's been great. I think we'll try and promote someone else really onto our panel as well. But thank you, Rebecca, for visiting us, for joining in, and thank you for your question. Bye. Can I bring this into some of the things that Phil mentioned, and that's really about the appetite. I think consumers will be interested for a number of reasons, but what is the angle for operators and investors? And Phil, you've done some really interesting research into this, and you've asked investors that are either already active in this sector or in the care sector and others to talk about it. And maybe we can show the slide about whether people are interested or the impact on their investment decisions. So if we could maybe share that slide, and Phil Schmidt, that is, if you could maybe talk us through some of the findings from that.
I'll take it off mute. Yeah, I think the what's interesting at the moment, I think certainly that the willingness and the interest is certainly increasing to look at the market. And I think you've got nearly about a third of people, investors, and this is anyone from private equity to investment managers to debt to developers, looking to increase or looking to get into the retirement housing space. Many of those that haven't changed are already in, already invest somewhat, but I think there's definitely a growing interest in looking at ways to enter the market, and some of that is leveraging their experience and their skill set from other parts of the market, which may be off the back of all of this have been adversely affected. So some of my colleagues that cover hotels, for example, there's a lot of investors in there who are looking at, okay, what skill set do we have that we can take across that can maybe make use of our facilities, the real estate, or even just the management teams and the individuals there. So there's certainly more inbound. It's not without its challenges. We'll maybe touch on some of those later. But I certainly think there is a growing desire amongst investors to find a way to get involved in the sector and in the market, because I think they see the obvious benefits. And they see the potential direction of travel.
For me, I think, Phil, obviously that's encouraging, but you'd expect me to say that. And maybe I can go to Phil Bayliss on this one in terms of that investment appetite, whether your appetite as an investor in the sector remains unchanged because of COVID, or potentially even has increased. I don't know. What are your views on that?
investors don't like volatility, stating the obvious, which when volatility is around, you often see investors pausing and reconsidering the investment proposition. Where are house prices now? I'm not sure anyone could intelligently answer that, and where are they going, which is often the more interesting question for most people out building a pipeline of retirement communities, and probably more important is what does that profile look like, is one side, which is sort of the real estate focus, and then the more interesting element is the human element. Is there anything that's been a structural shift that's changed forever from this in customer demand? I think that's what I see. That's what I read when I see Phil's summary slide there is, I think that investment reaction is there's something here that this crisis has brought out more than ever, and a focus on maximising independent years and health span that is going to help us increase our relevance to society, help increase, sort of an extension of the conversation we just had, help increase our awareness across society, and start becoming the sort of go-to social prescription from the GP is the equivalent of what I was thinking. The going to the has there anything structurally changed with the customer? I think the things we're identifying are all in retirement communities' favour. I think security is important, availability, a flexible care environment where you've got care if you need it is important. Self-contained, independent living, the design elements are important. So the whole investment rationale, if anything, I'd say has got stronger. So land will certainly be cheaper in the next 12 to 24 months. House prices will bounce back, but we don't know when at the moment. And I think consumer demand longer term, as long as we all do a good job of raising awareness, will help feed an increasing amount of demand. So the high level investment rationale that Legal & General signed up to when we launched Inspired Villages and Guild has only got stronger. So I'd certainly be in the more likely to invest more money section of that slide.
That's very encouraging to hear. And I think just kind of briefly got a Will on this one, because obviously AXA also has big plans for this sector. Would you agree with Phil on that one?
Yeah, I mean, I think that rather than starting looking at the short-term position, I'd start looking at the long-term supply and demand dynamic, and I think that looks as compelling as it ever has done. The reason AXA bought RV was it identified a very strong megatrend that was an aging society and a significant opportunity within this particular part of the market to do something useful in promoting the longevity that we've been talking about. So that doesn't change. The short term, of course, is uncertain, and I look at that as through two lenses. One lens is, well, how do you mitigate risk? And that risk will be around illiquidity in the property market, and we are completely exposed to that. But the opportunity will be, as Phil mentioned, recalibration in the land market. And as a business that is acquisitive, we'll be looking at how we maximize the opportunity to acquire the right sites at a time when we'll inevitably see significant distress, ensuring that we can build that midterm pipeline. And I suppose the reality is that we're in a game, rightly or wrongly, a lot of the time it's frustrating, but we're in a game where the life cycle of the development that we undertake is 3 or 4 years in gestation, and therefore we're acquiring today for projects that actually don't get realised or delivered to market for a period of time, through which I expect to see some of the sort of shorter term challenges start to stabilise. What none of us know is what happens in terms of the depth or the duration of any recession. All we know is it's going to be extraordinarily significant, and the economic shock that will be rooted in employment and lack of earnings will have a material impact on the housing market. But there are policy levers that we would be pushing for to ensure that the retirement sector can be a sort of catalyst to recovery, and ensuring that we balance those policy responses with an operator response that confers maximum flexibility for the consumer as to how they access the product, how they pay for the product. I'm confident that there are ways that we can bounce back more quickly than we might think.
Thank you, Will. And I think you've already mentioned quite a few things about this, that medium term, about the next 2 years, and we'll talk a bit about that and the ways that we might mitigate it. And we'll talk a bit about the government response and especially the reducing risk issue. We have this slide here, and Phil Schmidt, because I think that's what really was borne out by the research with your investors, that what they worried about, certainly the short term, was, as this slide would show, a volatile housing market.
Yes, yeah. I mean, I think most recognising Phil's point earlier, they recognise the fact that there's going to be a cycle here. So even if we have a drop in housing pricing, and the housing market is subdued, that if you're buying sites now and looking to develop, clearly you'd be anticipating hopefully coming out the other side of it and it being less of an issue. But clearly it impacts on the entry point. It impacts on the assumptions that you build in now, and obviously, and as Phil said, investors don't like risk. And I think for a sector at the moment that still has a number of risk points, if you're now adding another one in terms of housing market pricing, that's just another challenge and another red flag for some investors that just make it hard. I think people are anticipating, I think, that there's going to be opportunities, and certainly a lot of the investors we talk to are in a position whereby they're able to act, they're able to invest, they're able to support. But some of the challenges for them is also about partnering, and I think those are probably some of the changes now. It's about partnering with the right parties and organisations. There's very few with the right experience, the right track record, and again, if you haven't got experience in running these villages, that's another risk that you suddenly put onto the profile. So the more of these risks that people can reduce, the more of these risks that government can help with, things like planning, for example, the more likely you are to see additional investment coming into this sector, to really grow it. And I think the important thing that everybody understands is that we need more investment into the market in order to grow it, because those that are in it now can't do it all on their own. But it needs to be the right type of investment and the right type of operators that will benefit all. Okay.
So I think that leaves us in an interesting situation. So we've heard that investors more likely to invest, potentially more interest by consumers. But obviously there's that dreaded kind of, next 2 years. And I think, Will, your point was interesting, that if I'm building a new community that might open in 3 or 4 years' time, you might be reasonably able to see the end of that, and there might be opportunities in the land market. Obviously, if you're opening, if ARCO Villages opens in June 2020, situation would be a bit different. So how are you going to react? I know that some of you have villages that are currently selling, and in fact will be opening in that time scale. How will the housing market impact on shorter term operations, and what are your thoughts on how to mitigate that issue? And I think part of those issues are that obviously if you're crystallizing, the house builder model is predicated on crystallizing profit or loss at one point in time. but will this push us more into long-term models where the sector was heading anyway? Maybe Phil Bayliss on that one.
Good question, Michael. I think it brings a heightened focus on being quite obsessive around delivering a customer-focused model. And what do I mean by that is we've all mentioned a little bit, but we do a little bit of rental, we do a bit for sale. It's often use the example of you go into the car showroom and you pick the car you want. You don't let the financing solution distract you. And the car industry worked that out a long time ago, but the housing market still works on here's the cash price and that's it. And I think we need to blur the lines of housing equity and financial advice, frankly, and be much more in tune with each customer that walks in the door will have their own financial requirements that helps address their housing and living needs. And so having a flexible model, the deferred management fee certainly helps affordability. Having rental, being quite flexible in that approach. Then the other things that I think we're certainly gearing up for a sales launch in the next week or so, and thinking through. Obviously, you need a super enhanced operating procedure on how you show people around your communities, but putting that to a side, you need a fairly diverse toolkit to get transactions done. So, really thinking around, can you do part exchange as an example? Can you buy their house off them to help them move in? Can you do bridging loans? There needs to be quite a lot of creativity, and that inertia of wanting to stay in your own home, or maybe not wanting to stay in your own home, but just that building of the inertia of it's all a bit too difficult. We're enhancing the toolkit we previously had to make sure we've got plenty at our disposal to allow that transition of models. I saw an interesting little side bit, and I like references to other sectors that are starting to grow up or go through different evolutions. And I saw Revolut had an interesting chart. They said, how many clicks does it take to create an online account with us? And they plotted it against a whole bunch of online only banks and then all the traditional high street banks. And for Revolut, it was 28 clicks and you got an account with us. And for HSBC, it was 145. And I think a little bit like that with the housing market. And I've asked my team that question is, what's the equivalent of how many clicks it takes to transact with us and move into the community? And that journey of how difficult or easy do we make it for people to say, I'm pulling the plug on where I live and I'm moving over there. That is a daunting that we all have to address. That's a daunting process to go through. And how do we become the Revolut rather than the HSBC of that journey? I think it's an important challenge to remove all the headaches of that move. It's more important now than ever.
Very interesting comparison there. Honor.
So my Revolut, I mean, I love that. I love that little analogy. So last Thursday I met Jerry, who said, I can't do this anymore. I can't be alone. So I called John Lewis, took all the furniture that could be delivered by one man, because they can't do two-man delivery, that I could construct with an Allen key, because I don't have a screwdriver here. And so I did all that on Monday, and I'm meeting Jerry at 12:15 today, and he's moving into apartment 9. That was my Revolut. And this isn't really particularly about rental. You probably, if you had a willing general manager, could do that on sales, couldn't you? But it is, I love that analogy. How can we just do the Revolut? Yeah, Jerry, see you next Thursday. You're in.
But can I ask on that? I think there's an interesting point here that to what extent has that ease of moving in, or in fact, a problem with selling their old home? And I know that in the London market there was a Brexit uncertainty and it was quite a slow market anyway. To what extent was that a contributor to people moving into you in the first place?
People don't come to us because they choose to rent. They choose to live in Sidcup, I think. But having rental has meant that so if I think about this, there's 7 people moving in July. From the 1st of July, we open the doors again. There's 3 on the 1st of July who have all not sold their houses, but because of what they've just been through, they're just like, can we just get in? We'll sort it out. They all have about, 50 grand rainy day money. Good for them. And they will sell their houses at some point in the autumn, they think. So how would they have managed that in the for sale model? I don't know. Probably someone like Phil could completely work that out and buy the house off them. But the rental model just made it so easy that they're in on the 1st of July. And I think we've done 3 move-ins during lockdown from people who just couldn't cope. And, John Lewis has done a good job here.
Good on you, Alan Key there, Honor. Jane, you wanted to come in?
Yeah, I think that the flexibility point is critical, isn't it? Particularly for the coming months when things are still going to be unclear. So I think the other thing that's been exercising me a lot is thinking about trust, that everything we've said is about the consumers, the customers, the residents who are looking at our services, the people living with us. This is not a housing option. This is a lifestyle. And generally people know that whether they're renting or buying or whichever tenure they're using, they kind of hope this is their last move often. And I think one of the consequences, not just in our sector, but generally in service provision, in a post-COVID world or a kind of living with COVID world, is going to be about trusted operator status. That this is a safe place where we are committed to making sure that you're safe and getting that balance right of being safe and trusted, but without being paternalistic and stopping you doing stuff, kind of enabling independence and interdependence whilst also being trusted, I think is the sort of will differentiate the good operators in the sector. And if this is a sector that it has good operators in it, if we can build that trust, that will really help as well with the earlier question from Rebecca about awareness and attraction of the sector. So I think we're kind of exemplifying in this discussion, it's quite a complex mix, but if we get that right, it could be really powerful for how we can grow the sector.
I think interesting points about the tenure flexibility, because I would certainly agree with Honor as well, in terms of it's not really about renting or buying, it's about finding a solution. And I think that's what Phil Bayliss mentioned about what do customers actually want. And I think getting away from this, well, you either rent or you have to go through this process of buying. Isn't there something that we can structure the deal? To your point, I think we'll come to a question that Phil Schmidt also asked, what investors thought about that one. Can I just ask a question? Because obviously the housing with care is what ARCO's members do, but something that I've found quite interesting is that obviously the care sector is something that's had a difficult press over the last few weeks. At the same time, I think we've come to appreciate care workers much more. But I think there was always, from the investors coming into this sector, some of them were quite scared of taking on that people risk of like the care bit was something that some of them were quite keen to, by necessity or by choice, to approach with caution, and it is obviously very difficult. But on the other hand, we've got this issue of, people are looking for that sense of security. So what are your thoughts in terms of, are you more scared of the care element because there's transmission and there's people risk? Are investors more scared of it, or is this something whereby people are saying, well, without that safety net, it really doesn't work? So I'd be interested in views on that one, because you might see some, especially property investors, going this way when the customers actually are going that way. Who's got a view on that particular point? Maybe I'll start with Phil Schmidt and then go to Will after that.
Okay. I guess for some it's pretty binary. They can't. And I think for some, if you're a real estate investor, you can invest in real estate. So there is certain protocols and hurdles that people have to clear. Obviously, retirement villages have that within it in terms of how the care is provided, and for many that is the fundamental challenge, particularly long-term institutional money. Having staff on their books effectively is a big no-no. But that said, I think everybody understands and recognises the importance of the care being a fundamental part of the whole, and it's how you facilitate that, keeping control of it, and manage any of the risks associated with it, even if you have decided to outsource it. You know, if your name is above the door notionally and you've used Joe Bloggs down the road for your care, you investors and organisations are you know, ensuring that Joe Bloggs is not going to, you know, they may have a great relationship with you, but it's the relationships maybe that are not so good elsewhere that you need to be more concerned about. So I think care is fundamental. It's definitely on people's radar. It's just, I think for some of it, it's a convenient regulatory split, and just comes down to the simple fact of whether or not they can have it in-house or not.
Will, you put your hand up on this one?
Yeah, well, I mean, I think I agree with Phil that it is fundamentally important. Yeah, a customer proposition in this space that that doesn't deliver, you know, high quality care, a high quality care proposition, particularly in the home, I don't think, you know, is fit for purpose, quite frankly. Now, I run a business that chooses to deliver that through a partnership model that we can performance manage, but it is a fundamental component, you know, pillar of the customer proposition. The care home, you know, we don't run care homes, but the adjacency or co-location with care homes, I think, is a situation-specific factor that, you know, the response to which varies depending on you know, the locality, the demand, the supply, and I think, you know, it has a very important part to play actually in many scenarios to ensure that the whole life cycle of aging is best catered for. You know, do we, you know, we don't deliver that. Do we see a reduced appetite in co-locating with care homes as a result of COVID? Absolutely not. You know, this is a situation that we, you know, COVID, we will pass through, the world will renormalize, and we need to be customer focused in ensuring that the proposition is structured and considered and formulated in the right direction, rather than, you know, dealing with or responding to any perceptional issues that may be simply short term.
Thank you, Will. Jane, on that point.
Yeah, well, I suppose investors price in risk, don't they? And care delivery is not without risk, but it's to us it's an essential part of the service that sits within housing with care. And I think, you know, there is an increasing maturity amongst potential investors and funders about the indicators of what good care looks like. So the same tools that customers use, residents use, so CQC ratings, stuff like Your Care Rating from Ipsos Mori, the Which reviews, all of those things. There is a focus on care delivery, which has an upside in that if you're good at it, that becomes more public because, you know, CQC ratings, Your Care Rating, the Which analysis. And I think that there are investors who are pretty savvy about those things, and they know how to price that risk in. I mean, workforce is undoubtedly a key issue if you're involved in the direct delivery of care. The quantity of workforce, which has been one of the challenges during COVID, the number of people needing to self-isolate has been, you know, one of our biggest operational challenges, but also the quality of workforce. And one of the, let's hope, one of the upsides of this really tough time is that we have been able to shine a light on the great work that people in this sector do, the broader care and housing sector, and we're certainly attracting people into the sector who've never thought about working here before, and some of that is because other sectors are looking a bit shot for a while, and this is a sector that has got opportunity for great people. So we've had a really strong recruitment campaign over the last kind of couple of weeks, and we've attracted some great new colleagues to work alongside our fabulous existing colleagues. So I do think delivery risk around care cannot be denied and is an important part of the investor process, but it's not completely without indicators and ability to manage and price and mitigate that risk.
I don't know if Phil Bayliss wanted to talk about that one as well.
Yeah, thanks, Michael. I dropped out, so hopefully connection's okay. A really topical question for me. So Legal & General is the biggest provider of pensions in the UK. We pay 1 million pensioners every month. We have 1 in 6 people in the UK have some sort of product with us. So the brand that I represent is very valuable, and therefore the risk to that brand on a care scandal is a heightened one, more than most investors. So our approach to care to date has been it's key, and we believe the availability of care is key. Let's work with the best local business that provides care on site. So we in fact host a domiciliary care business on site. Still hear me?
Yeah, I think you're back now.
Yeah, sorry. That's changed. This is definitely, you pick on something which is a good point, is we've sped up. I've always thought the long-term vision is we'll have care in-house. We just weren't ready for it yet. We had
I think we've just lost you again, Phil. I think you're about to make a really, you were saying you had your long-term plan was to have care in-house?
Was to have care in-house. That's sped up. So we're reviewing. We look after older and frailer people at some time in their life. They're highly.
I think having few connection issues there with Phil.
Keep dropping out. Sorry.
Okay, but I think that's an interesting point about the reputational thing. Trust, as Jane said, is a really important point generally, and I'm sure that's the point, Phil, that we can discuss further. I think we're nearly out of time. What I think I'd like to talk about is really that customer, so the government reaction, because I think what we're looking at, and we've heard that the next few years will be about flexibility, about tenure options, being a bit more creative in some of the things we can see, making that work, and potentially, in my view, probably accelerating the move away from that old kind of rigid leasehold model. And maybe this crisis is a bit of an opportunity actually to play with some of those new models where we're not into that dichotomy of, you know, are you going to do all that buying? Are you going to rent? Are you going to buy? But actually, what do you want in a 28-click way? You know, who knows? Maybe we get to that one. So in terms of that, some of ARCO's work that we've been doing, because what I've been hearing from all of you is around risk. The sector has risk. It has people risk. It has the risk of being a nascent sector where regulation is still a bit unclear. Add in an unsecure or volatile housing market, obviously that increases risk. Before I go to a slide from Phil, what investors were thinking about what the government should do, I've really got a question for Jane, and that's around, I think we've talked a lot about the private payer market here, but I think it's really important to remember that 2/3 of what we offer in this sector is actually provided by housing associations in the form of extra care, which is growing a bit more, less quickly as it was in the past. What is the impact going to be on that particular sector if we consider that a lot of the growth of the sector was funded by public grants and going into a potentially austerity period or uncertain economic times? So I'd be really interested in your thoughts on that one, Jane.
Yeah, I think it's early days to tell, but I am confident that there will be support from local government and central government for housing with care models in the affordable market. I think the case has been well made in the past, and it's always difficult to align a well-made case with some money. But the whole point about flexibility, the affordable part of the market has significant demand within it. And I think it probably leads into the slide that you've referenced that Phil's going to talk about in terms of where the government might go. I think ARCO, the ARCO team and many of us as members of ARCO had been doing a really good job of influencing the team that were working on the mythic social care green paper. Written about a decade ago, as I recall, delayed more often than you don't know what. But certainly the value of housing with care, I think, has been better understood in recent years within that broader social care debate. And I'm hoping that the politics of this will enable some positive moves forward around how housing with care can support the resolution of the intractable problem of what will we do about social care. So I feel positive at a kind of central level. And also, I think, we've got relationships with local authorities around the country. We work in 91% of local authority areas, so there's not many local authorities we're not talking to one way or another. Issues differ at a local level, but fundamentally, the other thing, of course, is that there is going to need to be stimulus in the market for construction, for jobs, for activity, for infrastructure, and affordable extra care would be, as indeed all types of retirement housing. This is the mantra that I'm certainly using if I get a chance to speak to anybody in MHCLG, is this is a sector that with some stimulus, some support, or just taking away some of the barriers could play a very, very important role in a kind of post-COVID recovery period.
I think, Jane, that tees us up perfectly for the next slide, because that's certainly discussions we've been having with MHCLG in terms of how can we contribute to that recovery. So maybe Phil, would you like to talk us through this slide here about the what investors think, what government should do, or what would help them? Which government intervention would help them bring their investment forward? Phil Schmidt.
Yes, yeah, I think obviously as Jane alluded earlier, that investors can price all the risk, and if we start stacking all the risks up on top of each other, you just end up with a point where it gets very expensive. So taking away some of those risks maybe that are within the control of government is certainly an obvious area to look at. Clearly housing values are not necessarily one, but from an investor point of view, and I'm sure everybody on the panel can talk about, as any developer can talk about, actually, the planning system is ridiculously slow, painful, uncertain, and might cost you anywhere between 6 months, if you're lucky, to 2 to 3 years on your timeline. And so I think, for the sector itself, I think some more clarity around housing with care, how it's treated. I think Nirvana is obviously having a use class, but I think a bit more certainty over what housing with care is and offers would certainly help, and to remove some of the the ambiguity and the enormous variances you see amongst local authorities around the country, particularly I think particularly those where you've got the split between unitaries and local and district based social care and planning. If you're talking about a unitary authority who's in control of the whole, they might hope they'd be a bit more joined up. But if you've got local authority dealing with planning and then the unitary dealing with dealing with social care, it's obviously the two maybe don't speak, and sometimes there's conflict. You've only got to look at places where you've got maybe Labour in control of one and Conservative in control of the other. Sometimes it becomes a bit political. I think government strategy around housing with care would certainly help. I think some of that is linked to the planning system, but I think being more joined up and coordinated, it just helps remove these risks, and it just means pricing those risks becomes more straightforward. I think what's interesting is around the legal certainty on event fees. I think actually a lot of those obviously that we've gone to have either been looking at the space or already invested. So I think for many, there's an understanding and acknowledgement of what's coming down the line, and actually maybe for some that's less important at this stage compared with some of the others. And then on the tenure choice, I think a lot of that comes back to it's more about how do you bring income into the business model at an earlier stage, rather than having development-led profits and then event fees 7, 5, 10 years down the line, depending on how old your customer is. If you look at, I spend a lot of time talking with my colleagues over in the US. So Lisa Widmeyer, who heads up the US senior housing business. Some of the insights they had post the last recession, 2007-8, depending on which numbers you take, they saw roughly an honourable like this one, a 40% increase in rental within the retirement housing space. And some of that was driven by stagnation in house prices or drops, which meant people maybe delayed the decision for a bit, or decided they still had to move, but they couldn't sell their house. they still needed the move because the care need and the health need or the isolation hasn't gone away. And so they saw a big surge in rental. And I think some of that, is obviously in the UK here, you've got shared ownership as well. Some of it as well as how you remove some of the stigma associated with those different tenures. And I think the more people that start to use shared ownership, the more people that start using rent, it just becomes normal. And therefore you lose some of that, Mrs. Jones doesn't own her property, we'll exclude her from Bridge Club. I think some of those perceptions that maybe people have before they move in get removed. But I think from going back to the slide here, that from investors' point of view, most of their risks at the moment all sit around, and over 50% of them, it was around housing market and planning. And so planning is within the gift of control for government to help with. And so I think that would alleviate a fairly major risk at the moment for those looking to enter the sector, but also those in the sector at the moment active.
Yeah, I think this quite neatly sums up really some of the work that ARCO is doing in terms of telling the government that there are levers here to pull. I think the tenure flexibility. Let's not forget the resale market, which is an important part of what this sector does. And actually buying back properties at this point in time is actually quite difficult in terms of operators pay stamp duty at the point of doing so. So it's not just about what you sell first time, it's how you potentially change your model to allow leaseholds to be brought in. So I think that's a good summary of some of the lobbying issues that ARCO is concentrating on. So I think we're basically over time, and unfortunately I'm going to have to wrap up now. There is no applause, unfortunately, for our panel. Maybe kind of some jazz hands or something from me, but I think that's probably as far as it gets. But thank you very much for joining us today. I think that was probably the first of several discussions that we're having. The digital season that we're running is obviously running on. There'll be an event next Wednesday. We're releasing a report from Cass Business School on the effect of downsizing on the housing market. And that estimates that by 2040, there will be more than 13 million surplus bedrooms in the homes of those over the age of 65. There's an event that's on planning. There is an event on tenure models as well. So you can join us for that event, and you'll be emailed the details of that. So thank you very much for taking part. I've certainly taken away a huge amount of notes on this one. Phil Bailey's unfortunately fallen out, but I think that Revolut kind of how many clicks does it take to move in is something we'll definitely need to explore in quite a bit more detail. Also, thanks again to Phil and CBRE for supporting this event and for doing that research, which we find hugely fascinating and encouraging for our sector. That's something we really like to hear. So finally, I'd like to say behind the scenes, I'd like to also thank the people hiding behind those two logo slides that you can see. And that's my colleague, Katie, who's been doing a huge amount of work for this, and Ellie, who's been going through the questions. So thanks to those two. So we hope to see lots of you in other events from in ARCO's digital season. Hugely important time for the sector, as you will have heard today. So very much looking forward to that conversation, and I hope you have a great rest of the day. Thank you very much.